Hi everyone, Michael Elliott. I am the Campground CPA with Camp and Park Accounting, coming to you today with our Ask the Campground CPA question series, and this is question number 7. In question number 6, we talked about a concept called ROI, so return on investment. You can go back and listen to that episode, but I wanted today to kind of bring a new twist to what we talked about last time. And so ROI is the return on investment, meaning how much can I reasonably expect to earn in a given period of time on my investment in an asset. Today, I wanted to talk about a question I've been seeing more and more recently, especially as we are in an interesting time for purchasing campgrounds, and that is purchasing a campground worth the investment? Is it worth the investment? And I was thinking about it in context of ROI, in context of return on investment. As with any investment that you might make, right? In terms of any investment, whether it's commercial real estate, the stock market, or a campground, we need to look at what is the anticipated return on that investment. How much can I reasonably expect to earn by risking my money to buy this asset? Now, we exclusively focus on campgrounds and RV parks, and I'm a CPA who does this exclusively. And in my experience in the industry, I can tell you that the return on investment for most campgrounds and RV parks is pretty significant. You can earn a really good rate of return on your money by investing in a campground or RV park. However, you have to still be smart. You still have to make sure you're investing in the right opportunities, because there's a lot of good campgrounds for sale right now that are at the right price, and there's a lot of good campgrounds right now that are for sale at the wrong price. So you need to be smart as you think about investing your dollars. Just because you're investing in a good asset does not mean it's a good price, because you can buy good assets at bad prices. Now, there are situations and circumstances we're not going to get into where I think that buying a good asset at a bad price can lead to leverage further down the road and other opportunities. However, today I want to talk about what are some of the things that we need to be thinking about as a prospective campground owner, or as maybe potentially as a current campground owner who's looking to expand their portfolio into other options. Well, I think first off, we need to evaluate gross revenue numbers. We need to verify those. We need to look at profitability metrics. But then beyond that, we need to look at things like deferred maintenance, right? To try to make a determination about what the underlying value of an asset is. Future episodes of the Ask the Campground CPA question series, we're going to look at some of the common valuation metrics that are used not only in the campground industry, but are used for commercial real estate and business ventures across a wide variety of industries. But today I want to just think about and kind of start whetting our appetite to think about what is the return on investment for a campground or RV park. So, what we need to do is we need to, first off, look at what are our gross revenues that we're anticipating. What prices are we going to be able to get per site per night, right? Or per cabin per night, whatever the case may be. What are prospective occupancy going to be? What has it been historically? What is it today? And potentially, what can it be in the future? A lot of folks want to value campgrounds and RV parks at full occupancy down the road, right? But as a prospective buyer, I would challenge you to think about that full occupancy down the road is great, right, from a seller's perspective to value the park. But as you as an owner, you're taking the risk today on unknown future results down the road. So I tend to, as I'm advising prospective park owners, I tend to encourage them to look at today's metrics with an eye towards tomorrow's, right? An eye towards tomorrow, what we can maybe make the occupancy or the rates, whatever the case may be. But knowing that there's a reason occupancy is where it's at today, and there's a reason rates are at where they're at today. So it's important to run that analysis to try to understand what we can anticipate in terms of gross revenue. We then need to break down the expenses, and you're going to want to get 2 or 3 or 4 or 5 years of P&Ls from a prospective seller to understand what are the expenses this park has been incurring over the last X number of years. And then do some estimates. Ask folks in the local market, ask other campground owners, what can I expect in terms of repairs and maintenance? What can I expect in terms of utilities moving forward, right? What are those costs looking like both in the last 5 years, but also what are they today and what do we think they're going to be over the next 2 to 5 years? We need to get reasonable cost estimates to be able to put together a list of appropriate expenses that we anticipate for this park so that we can subtract those from that gross revenue number that we anticipate to kind of get a net income figure. And I would say that this is a net income figure that needs to have probably a slight asterisk to it. And here's why. Because with every park, and I've worked with owners who have bought parks that have been in existence for 20, 30, 40, 50 years, and a lot of parks come with some amount of deferred maintenance that's going to have to be done when you buy the park. Meaning, if you're not budgeting for that $50,000 septic improvement, and some of you are saying, hey, Michael, 50,000, right, maybe $500,000. But if you're not thinking about that 50,000 septic improvement or that $20,000 store roof repair, right, if you're not anticipating those things on the front end, your ROI numbers, your rate of return that you're going to expect on that property is going to be estimated too high at the front end. It's going to be much too high because you're not calculating some of those deferred maintenance costs. So as a prospective park owner, we need to be thinking about what are those deferred maintenance costs? How much do I need to be setting aside each year over the next 1, 3, 10 years and start accruing that or reducing that prospective net income number in order to get a more appropriate return on that investment calculation. So what we encourage park owners to do is sit down and calculate what that deferred maintenance cost is going to be over the next 1 to 10 years, divide it over that number of years, right, to come up with an average expenditure, subtract that from the net income number, and then that is the adjusted net income number that we'll use to calculate ROI, return on investment. Once you've got that number, we divide it by the prospective purchase price to come up with an annual return on that investment. What do we do when we have that annual return on investment percentage? We compare that against other investment opportunities we may have. Can we get a better rate of return in the stock market? Can we get a better rate of return in commercial real estate? Can we get a better rate of return buying self-storage units, a dry clean, whatever the case may be, right? We compare that across industries to see and make sure that the return on investment we're going to anticipate for this park is appropriate when making the investment. Now, I'm a numbers guy, I'm a finance guy. But let me tell you, I am fully aware that there may be reasons beyond just numbers and metrics to buy a campground or RV park. For some of you, it may be a lifestyle decision. For others of you, you want to quote retire, right? Retire at a park, and this is kind of a second career kind of a thing. And so maybe ROI, return on investment, is not the most important thing. Maybe all you want to do is pay your bills, and I respect that. But for the vast majority of you, you need to be thinking about your purchase and make sure you're making the right purchase. Because remember, there are good assets that can be bought at good prices, and there's good assets that can be bought at bad prices. And at bad prices, we might need to move on and look for other investment opportunities, either inside the campground space or outside the campground space. If you're a prospective campground or RV park owner and want to bounce some ideas off of us, please let me know. We exist to help campground owners, prospective campground owners, have peace and security in the financial decisions that they're making. And there's probably no bigger decision that you're going to make than the decision of whether or not to buy a specific park. So please reach out to me, michael@campandparkaccounting.com, or go to our website, campandparkaccounting.com, to learn more about us. But we're here to help you as you make these important decisions. Have a great day.